Now, in the meantime, I'm going to introduce our next panel, which is Reshaping the Sustainability Investment Case, Risk, Returns, and the Economic Opportunity. How sustainability smart strategies are reframing growth, innovation, and competitiveness. Now, this strategic session will bring together C-suite leaders from MENA enterprises to explore the evolving narrative around climate investment and corporate strategy, shifting from cost and compliance to opportunity and economic advantage. With global capital markets increasingly favoring more sustainable and climate-aligned assets, how can MENA companies position themselves to benefit from this? Ladies and gentlemen, this session will unpack how climate action is being redefined as a core driver of competitiveness and economic transformation, with increasing emphasis on new growth industries that will create high-quality jobs for the region's young and fast-growing population. Speakers will explore how investments in clean energy, green infrastructure, and sustainable technologies are reshaping value chains, catalyzing innovation, and opening new avenues for prosperity, turning sustainability into a defining feature of long-term economic success. Before we start, I would like to note to everyone, please, if you would like to come forward, you are able to do so that we can better interact with our speakers. I'm going to introduce our speakers and who will be joining us on stage. We have with us Seneca Cottom, Head of Sustainability, Shaya Group, Sarah Baashan, Corporate Sustainability Director, Aramco, Mary Claire Davou, Chief Sustainability Officer, Caring Group, Mohammed Al Ali, Chief Strategy and Sustainability Officer, Bank of Bahrain and Kuwait, Clint McLaughlin, Director, ESG and Technical, Aluminum Bahrain, and our moderator, Kalyan Krishnan Subramanian, Director and Head of Clients and Markets, KPMG.
Ladies and gentlemen, if I may request, if you want to come up front, the front row is completely available. Please join us. Good morning, and thank you for being a part of the discussions. And I think as the day goes through, you'll see a lot more depth come to the conversations. I think, as with every year, I always have a very, very unique panel. And this year, I think they've taken a slightly different twist. I almost need to adjust my glasses to see to the end of the other panel. And at the same time, we have leaders who also happen to be practitioners in this space, which makes the conversation a little more interesting. I don't know if you've been following the conversations from COP or the WEF. There's a very interesting system that's been happening, that you see three core words that have been used over and over again across both platforms. And what's interesting is that it's not necessarily words related to ESG or sustainability or climate change specifically. The three words that are used over and over again are value, resilience, and competitiveness. Three very, very important metrics in a business. Most heads of finance and CFOs will tell you that they have this on their list of KPIs. But what makes it interesting is to try and see, how do we break that down from an ESG standpoint that links it back to pragmatic steps and processes within the business to be able to establish those three areas: value, resilience, and competitiveness. What I would like, and if I may, is ask my panelists, just so that you have a flavor of who's on stage, is to do a quick introduction of themselves, but also importantly state the sector that they represent, just to give you an idea of the diversity on the panel. Seneca, please.
Hi, I'm Seneca Cottom. I'm head of sustainability for Shaya Group. And you should know, I'm hoping that you all know who Shaya Group is. We are the company that brings you the most notable brands into the region in both retail and hospitality.
Coffee to cotton all the way.
Yes.
Brilliant. Please, Sarah.
Can you hear me? Okay. Hello, good morning, and assalamu alaikum. My name is Sarah Ba'ashan. I am the head of corporate sustainability in Saudi Aramco, one of the largest integrated energy companies of the world. And previously, I had the pleasure of working with the ministry on climate-related issues and trade as well. So that's where I come from.
Fantastic. Thank you, Sarah.
Thank you.
Marie?
Good morning, everyone. Very happy to be with you this morning. So, I am the Chief Sustainability Officer for Kering. Kering, it's a luxury company. I'm sure that you know our brands, Bottega Veneta, Boucheron, Gucci, only to name a few without, of course, thinking about Saint Laurent. My background, and I'm an engineer, and I was working before joining Kering more than 10 years ago for the French government.
Thank you, Marie. Mohammed.
Mohammed Ali, I represent Bank of Bahrain Kuwait, representing the financial sector in this panel.
Fantastic. Clint?
Yeah, we share. Good morning, everyone. My name is Clint McLaughlin. I am ESG and Technical Director for Alba, and 25 years now across energy, materials, metals, manufacturing.
This way you can hold on to the microphone before you pass it back, Clint. Let's get a roll on this, right? In one quick sentence, what is the sustainability investment case for you as an organization, but also for your sector?
Look, you've already said it, resilience and competitiveness. So Alba produces primary aluminium products. They are commodities, so not that different to coffee. It looks the same, smells the same, tastes the same. It is the same. Everybody's selling the same. So for us, competitiveness comes from building a resilient and making the steps and taking the steps to transform on sustainability. That's how we can differentiate.
Perfect. Mohammed, would you care?
Thank you. I think the business case in banking and for BBK, resilience, yes, we incorporate into our risk management practices, into our credit assessments for our clients, therefore helping us make better decisions. It's in the productivity of the human resources. If we invest and engage workforce, we get better out of them. It's in the growth, in the revenue growth. The more sustainable finance we do, we see a growth in our profitability as well. And then in competitive advantage, I mean, we are an enabler for the government and private sector to go into transition and green transition and into more sustainable practices. So that brings us ahead in the market.
In a few words, for luxury, sustainability is a duty. It's no longer about compliance. It was mentioned, but it's about growth, it's about competitiveness. And when we think about luxury, of course, the first image, it's about fashion show. But when you go beyond, it's about nature. We depend on nature, we depend on craftsmanship. So it's also based on trust. And if those are not there, you can destroy very quickly your business and your brand equity. So that's why no option not to implement, and it was mentioning before, very concretely on the ground, what we call ESG, sustainability, whatever.
Fantastic. Sarah?
I guess I'm not going to differ a lot from the previous answer. The case is very clear. But I would say in one sentence that against a backdrop where the world energy demand will continue to grow, particularly in the global south, more so for the MENA region, 22 million barrels of oil equivalent is going to be needed by 2030. The winning businesses, the leaders, will need to think about integrated systems. It's no longer one question in silo, ecology, economy, is it society, but it's really in the integration of all these elements, and they need to be applied with business rationale economic rationale. So they provide a robust business case and grounded in the realities of the setting for the particular company or the business. Because this is how you really create a business that stands the test of time. And with that, you drive competitiveness and resilience. And this is my particularly exact answer to your question.
Fantastic. Thank you.
In the retail and hospitality sector, our investment case is around people, especially now as retail is going more online and bricks and mortar is going away. We have to make sure that we have the best people that are treated well, and we're making sure that throughout our supply chain, all of our vendors and all of their employees are treated well, because people are what sustains a retail business.
Fantastic. For the next question, I was wondering, maybe let's go by almost similar sectors, because the idea for this session is to try and bring out some pragmatic solutions for even the participants. So if I can target Seneca and Mary as the first batch, followed by Clinton, Mohammed, and then Sarah yourself. In terms of the sustainability investments you've made, and you know that can be listed and that conversation can go on for days. But in your perspective, what is the one or two that has really delivered on the measurable outcomes that you kind of monitor on an ongoing basis, whether it's towards risk, whether it's towards returns, customer behavior, whatever that space is. So if you can start with you, Seneca.
So we have implemented, back in 2023, we started a program of waste reduction, because as a retailer, you all know that we are in the business of waste. Everything that we sell, everything that we make is going to end up in the waste stream. So we really take it very seriously how we're managing and reducing our waste footprint. One of the programs that we implemented in collaboration with Ericsson, the technology company, is their connected recycling system. And it's a platform where we're able to track our waste and then work in a circular manner with our vendors to recycle plastics, metals, all of those things, and then try to bring them back into our business as recycled products and packaging. In our pilots, we've been able to reduce our waste by upwards of 40%. In our restaurants. We've only focused on restaurants where we have the biggest impact, but we were able to reduce our waste footprint by 40%. And we're aiming, as we expand this across the regions, we're aiming to reach at minimum a 50% waste reduction. And as you can see, with a 40 or 50% waste reduction, we're not only just reducing our footprint, but we're also reducing our waste disposal costs across our business. So we think that this is where we want to accelerate over the course of the next year, so that we can bring in those savings into the business.
Fantastic. Marie?
So, to give you, I will say, two concrete examples. First, as an umbrella, I would like to say that sustainability and efficiency are one and the same. So, I was mentioning raw materials. It's about resilience. So we were able, thanks to our regenerative fund, to transform 1 million hectares from conventional agriculture to regenerative agriculture. So it's about the key raw materials for us: cashmere, wool, leather, silk, cotton. And it's also to be sure that we will be able to have the high standard of quality when we speak about the raw materials that we would like to have for the future in our supply chain, and also to have, I will say, the right pricing, because we manage also for the long run. A second example, which is more operational, which is linked with our logistics side. In our biggest warehouse in Italy, we were able to put in place solar panels. So again, it's about to reduce costs. It's about also to manage better the pricing of energy. And I take this opportunity to say that when we are implementing this kind of program, what I think is very important, and we didn't mention it so much this morning, it's about to see sustainability not only as a competitive advantage where we are in competition, but we have really to work in a collective approach. And I'm very happy to be in Bahrain because, as you can see, I am not a local and I come from Paris. And to tell you that, for example, thanks to the Watch and Jewelry Initiative 2030 that we created in 2021, we work with SMEs in Bahrain, thanks to Dana, and very happy to say hello to the CEO of this structure, where we are also able to involve the SMEs, because it's great to speak about us, but without SMEs and without our ecosystem, we can't do anything.
Absolutely. So if we take an industrial look at this now, apply an industrial lens to this, Clint, where do we stand in terms of, what's that measurable outcome that you've seen as a business, from a business perspective?
Yeah, look, I think this is, thank you for the opportunity. I'd like to use this question to take you on a little bit of a journey. So if you're not aware, to produce aluminium uses extreme amounts of energy, electrical energy. And over the last 10 years or so, manufacturers, primary industry manufacturers of aluminium have been differentiating their products based on the production carbon footprint. Now, many of our competitors have access to hydropower. We do not. Many of our competitors have built over the last 10 years a large recycling system. We are getting started. So in the last year, we've used our design, a new product range, and trademarked and registered it. It's called Eternal, so Alba Eternal. And we have Alba Eternal recycled, made from recycled aluminium content, so our primary aluminium plus aluminium recycling. And we also have Eternal allocated, where we allocate carbon savings. And these carbon savings are coming at Alba from our sustainability program. So reducing waste, recycling aluminium waste dross, recycling aluminium. We bank the carbon savings from these sustainability initiatives, and we offset aluminium products. So there's, in parts of the market, if you think about it, car manufacturing, there's a really high demand for lower carbon aluminium. And for many years, we didn't have access to this market. There is building over time. There's been some small increments in premium that can come from making these products. So we now have Alba Eternal in the market, and I think soon in the future we will have Alba Eternal Renewable. I'm pretty sure of that.
Fantastic. Sarah?
I'll have to say our continuous expansion enhancement of our gas program, Saudi Aramco gas program. We have invested more than $25 billion to bring the sales gas production capacity to 60% by 2030. And what does that does, or actually even before to go into what it does, but that's sustainability with a financial impact, because it's expected that the program is going to contribute between $9 to $10 billion in operating cash flow. And what I wanted to get to next is beyond the financial statement, because what it really does is take this abstract narrative of gas as a fuel for the transition to real deployment. The gas has grown by more than 70% since 2000, because it is the backbone of many emerging economies, and for us here in MENA. It's powers, electricity, but also feedstock for many products and chemicals. So from a kingdom perspective, it does help with the lower emission power grid by displacing the liquid fuels. And it, of course, it drives the demand for the products and chemicals and support the industrial base. And what it does beyond the kingdom is for the MENA region in particular is to support the energy security aspect that we saw how determining factor it is for the global dynamics.
Indeed. Thank you. Mohammed, from the financial services.
I'll pick three.
Okay.
The first one is our investment in the sustainable finance framework and the products creation that we've done. That's for us a major contribution reduction of the scope 3 overall in Bahrain. Today in Bahrain and beyond, we have about 160 million in assets and sustainable assets, contributing about 7.5% of our net profit and growing at 10% speed, right? And that growth is triple that GDP growth. So that's good for us. Investing in our energy conservation and effectiveness, we're investing about 300,000 dinars this year, reducing our energy consumption about 20 to 30%. But the last thing I think a lot of times is not very tangible is as a brand that's ingrained in the society, we've been investing a lot in the society. Yani over the last few years, we've invested over 6 million dinars in building hospitals and facilities, right? There is an immeasurable impact of that in the society and the brand recognition for BBK. And we invest 2.5 million every year in this. So when we did our study, about 100% of the people recognize BBK as a brand. And we're the #1 brand as the main bank for customers. And they see that association of how we are invested in the society as a key driver for that.
That's a fascinating thing, right? And I've noticed this over the past couple of decades as well. In the MENA region per se, social investment is often attributed to cultural norms and doesn't necessarily get measured, monitored as a part of what we would typically categorize as ESG. Unless you kind of clearly define, structure it to be able to try and bring that dollar value in terms of impact, and how do you actually put that tangible element to it. So, what I'm hearing from all of you is that this is clearly now something that's on your dashboard, something that is being measured, there is an element of alignment. But where does this all sit? Where does this sit when it comes to absolute financial terms? Does it sit within your P&L? Does it sit within your balance sheet? Where does this sit? We can start with you, Seneca.
First. So I think for us, it's about income. And I think people find that surprising when I talk about income. Just to give you an example, my department is fully funded by the revenue that we generate. I am a cost neutral function, and I really would highly recommend that businesses really think about how they incorporate sustainability. They often think that sustainability is a cost to the business, but in fact, we're not only cost neutral, but we're driving savings throughout the business. But we do that through our recycling program. We have a very robust recycling program where we recycle pretty much everything that we can recycle, and we work with our vendors to share in the income generation for any of those recycled materials. So this goes from e-waste to textiles to wood and paper and cardboard. All of those things are monetized, and they come in as income streams into the business. And then, of course, as I mentioned earlier, cost savings. There's loads of cost savings because, as was mentioned, sustainability is really about efficiency. And as you find areas to improve the way that you work, become more efficient, save on resources, you're also saving on costs. We've got lighting programs to switch out to LED, which has saved about 50 to 60% in some stores on the air conditioning costs because the lights aren't as hot, so we don't have to use as much air conditioning. So there's things like this that are generating income and creating cost savings for us. And then I think the final thing is loyalty. So sustainability is driving loyalty into our business. We do have a set of customers who really appreciate the programs that we have, the textile take-back programs, the packaging take-back programs that we have in some of our businesses. And this drives them to come into our stores, which then creates that loyalty and creates the competitive advantage.
Thank you. Sarah.
By the way, I found another mic. I don't talk that much. I don't think so. Maybe the gentleman will need to one. I think, Cal, once you look at sustainability with a pragmatic perspective, something we have heard, I counted 3 times where I heard the word pragmatic so far. But once you apply it with a pragmatic, business-like approach, economic rationale, it really is not about that one line item on your financial sheet. It's more of the cost structure, the cost base, the resilience of your margin, especially in times of volatility. And I'm saying this because take methane management, for example. We look at it, we have a methane minimization, a detection, and we're big on acronyms, so I always have to explain what it means.
We're KPMG, we know our acronyms well.
We have directory for those sometimes, but we have a methane detection and minimization program, and we look at methane, yes, GHG abatement for sure, but also from a loss prevention perspective, safety, asset durability. And this is what enables you really to have business that is really focused on basically looking at all these different elements together and provide operational durability, which is as much as important on your financial performance. Look at energy efficiency, and I'm looking at Clint, my industry, my sector comrade here. Energy efficiency and energy management is really foundational for industrial processes. And this is something that I would say that we have been mastering for many decades, from the design all the way to the operation. And this is what drives competitiveness. It basically impacts your operating costs right away, and it impacts your competitiveness position. And I talked earlier about the gas, but I wouldn't be here talking about Aramco gas program, enhancement and expansion if we haven't started that program in the 1970s. So really, the business rationale that is implementing sustainability within the business impacts the performance of today and the durability of tomorrow.
Perfect. Marie?
So first, in caring, we don't see at all sustainability as a cost, to jump on what it was said before, but it's really an investment. It was mentioned, so it's the same thing for us, water efficiency, energy efficiency. I will say it's quite classical as soon as you have industrial processes. But in luxury, it's more than that. It's also to be able to answer to the consumer expectations and above all the youngest generation. For them, it's really important when they buy a luxury product, of course, to have the savoir-faire, the heritage, but also in the DNA of luxury products, the fact that you pay attention to people and to the planet. So it's also the way, again, for the brand equity that we take into account what we can call efficiency beyond sustainability. And the way we measure, it's also how our consumers are reacting. So it's about a KPI in link with surveys. And after, it's also important when I was mentioning an investment. In the previous panel, we were speaking about adaptation. And even when you are in luxury, you have warehouses, you have boutiques, you have tanneries. So you have really to anticipate, not only around climate, because we speak a lot about climate change, but it's also the fact for biodiversity and for water, because water scarcity, it's a huge topic. And to be very concrete, in luxury, tanneries, it's very classical. It's not artificial intelligence. It's something that started centuries ago, but without water, your tanneries are not able to work, so you are not able to make some products for our sector.
Mohammed.
So, banking 101. We take money from here and we lend it here, right? And that's your funding. And we have today 8 environmental products between assets and liabilities and 4 social products. So a big part of our asset book today is sustainable. And then the profitability of those assets and liabilities also are reflected in our P&L. For example, we've signed a $500 million club deal that provides us with funding over 3 years. Because it's sustainability links, it gives us a cost advantage of 3 bips. Doesn't sound big, but it gives us a cost advantage in comparison to our competition. So it is reflected in our assets, liabilities, and profitability.
Fantastic. Clint?
Sorry about that. Yeah, look, I think it is now working. I think this gives me the opportunity to speak about, we've already mentioned the energy intensity of aluminium. And if you just go back in time, Alba's established for more than 50 years on a business model that is supported by Bahrain National Resource of natural gas. And we are reaching a point where the natural gas reserves begins depleting faster because of rate of consumption. So we're actually at a turning point, and it's almost a perfect storm. At the same time, we have renewable energy sources coming up in the region. And so when the natural gas begins depleting to a point, we will bring LNG, liquefied natural gas. This is far more expensive than our current pricing model in Bahrain for our natural gas. What this means, the positives of this is actually that renewable energy is very cost competitive when compared to importing LNG. So all of a sudden, when I say perfect storm, underneath the umbrella of sustainability and producing a lower intensity energy aluminium, we can bring renewable. And what's really good is that 2 years ago, we could plan into our ESG roadmap at Alba this opportunity to transform some of our energy source. And so after 2 years of a tender being in the market for more than 500 megawatts, it's very pleasing to see that we're now sitting at the table and in final pricing negotiations and arrangements of contracting in the order of that 500 megawatts of renewable energy. This will allow us to produce renewable energy Eternal product, as I mentioned, and market it to Europe, where we suffer from a European carbon border adjustment mechanism tax, or CBAM tax. So it really sort of is all interlinking very nicely for Bahrain, and I think our agility or speed to move on this is being very powerful for us.
That's fascinating, because with all of your contributions in terms of the sectors that you represent, there's a clear link back, whether we reference it to the P&Ls or where we talk about the balance sheet, there's a clear, observable impact in those spaces. I really like what you said, Seneca, in terms of also from a team standpoint, making it a zero-cost team. Last time I checked, I was still a non-performing asset. But, that changes depending on the scenario and what's required. However, in your forward vision, in terms of your future perspective, and you mentioned growth aspects, or you mentioned contributors towards certain growth aspects with each of those initiatives or each of the changes you made in terms of transformation. What do you see as the most credible growth factor as you look forward into the future of the organization, the future of the sector, that comes from one of the ESG or sustainability related factors? We can start with you. We'll go to Clint next.
So I would say sustainable finance. And it's not necessarily for Ashaya as a business, but His Excellency, Mr. Fakro, he mentioned about SMEs being the largest percentage of businesses in the country, and I would suspect that that's similar across the countries in this region. Our challenge is how do we get our vendors up to speed? They need that sustainable finance to get up to speed. That's one. And then two, I work quite closely with a lot of startups because I think that the problems that we're trying to tackle today will not be solved with the solutions that we have now. We need to find new solutions to solve those challenges. So I actively seek out new technologies and startups. But they're struggling in this region to get the financing that they need to service the companies the size of an Ashaya. And so in order for us to really move forward in this region, we need to continue or increase the amount of funding that are going to startups that are here in this region or want to bring their technology into this region. And that's what will help my business grow.
Okay, that's great. I might know a very close friend who sits quite to my left. I can introduce you to him a bit later. Clint.
I think... Look, over the next 3 to 5 years, and in line with the national decarbonising target of 30% reduction in GHG emission by 2035, and following the net zero target of 2060, really our program is about the two key things I've mentioned. It's available today, the two main pathways being recycled content added to our primary aluminium and greener energy sources. So really it's about greener energy, making greener aluminium, and recycling, making greener aluminium. And what's driving this is also the market demand on the other side of the globe. I mean, we send 25% or 400,000 tonne per annum of our aluminium into Europe. And there, starting in 2027, we are facing an escalating carbon tax. So it's in our interest to develop this pathway of green energy and recycling so that we can eliminate that tax, or at least keep that money here in Bahrain for reinvesting back in decarbonising and continuing the sustainability journey.
Okay. Marie?
I think not only for our sector, but when we speak about sustainability, we have two challenges. It's about scale and speed. If we make, I will say, the comparison with the scientific data, and when we see, unfortunately, the consequences of climate change and loss of biodiversity, so really to put at scale and really to go with the right speed. And in our sector, if we speak about the next 3 years, 5 years, you were mentioning, but I will put under the umbrella of circular economy, how we can not only do recycling. When we think about the quality of our raw materials, it's not enough, but it's really to do upcycling, which is quite more challenging. And it's also about the fact that if we want to change all the things on the ground, we need to have the right traceability of all the raw materials which are coming from all over the world to be sure that we can implement the best practices. And in our sector, you have to keep in mind that we don't buy directly cotton, we don't buy directly cashmere and all this kind of thing. So it's really to put again at scale supply chain, where at every stage people take into account this approach.
Fantastic. Mohammed?
Yeah, I agree. I think sustainable finance is the key driver. if you go to our website, to the sustainability page, we have our sustainable finance published and looks at all the different areas that we're trying to drive. A big challenge today in Bahrain, obviously, is energy, right? And you'd want to reduce that cost down for the provider, but also increase the effectiveness and efficiency of the energy for the corporates and for individuals. As costs go up, individuals will now demand better ways of increasing that pressure on their wallet. So as an organization, sustainable finance will be contributing to that. Will be contributing to the transition of the corporates, of the governments, and the public sector. Will contribute to the SME funds and to help job creation, and will contribute to the social elements that come along with that. So sustainable finance is certainly the key driver.
Fantastic, thank you. Sarah?
I would disagree slightly with my colleagues, not to say the importance of sustainable finance, but I would say that it's not one growth factor is going to be the key. In energy conversation, in one setting, you could be talking about innovation and technology, low-hanging fruit, and on the other of the spectrum, 600 million people who have no access to electricity. So what I'm saying is that there is no one silver bullet for all the issues. There is no one X factor that will solve it for us. I think it's going to be a suite of solutions. And many of the previous speakers have spoken. You've spoken about Davos last week. If you have followed or if you were there in person, our CEO talked about the AI, right, in one of the panel, and how on the matter of few years, what we call technology realized value, the return from the investment in technology, taking it from a pilot all the way to the real application, and how it even enhanced the actual exploration and production aspect of our business, but how that technology realized value jumped from a magnitude of hundreds of million to magnitude order of billions of dollars. This is the impact you can get from return on digitization when it also provides for sustainability, for performance and productivity. But he also spoke about the talent needed to be trained, to be empowered, to drive this kind of innovation. He previously in Davos last year talked about the same issue, but from the perspective, the demand needed for those large language models, the data center, the energy that is going to be needed to support all of that. And really, at the end of the day, we talk a lot about energy transition, but the reality is that also the transition or transitions is going to include the very disadvantaged areas in Africa where the transition is going to be from burning biomass to having LPG. That's a form of transition as well. And in recognition of what the Secretary General of the GCC mentioned, His Excellency, the circular carbon economy, I think it's one of the approaches that really link those different elements together. It recognizes the growth of economies, especially in the emerging markets, and it captures, in the exact terminology, it's reusing, recycling, removing and reducing the emission that goes within the system as it progresses and develop. So you got something like the hard-to-abate sector where you can basically capture of that's CO2 and basically transform it to synthetic fuel, for example. This is the multidisciplinary approach that I want to get just as I conclude my intervention.
Thank you. If I can just drag Mohammed back in.
Yeah, I don't think we disagree. Obviously, the metrics around ESG is like 100 plus metrics by any report you open. So there's so many metrics you're measuring and tracking and all of that. And all of them are important. And we still drive the social side, we drive all these elements. But if you ask me what is the key driver, what is the one thing that if we drive as a society, we'll be able to drive many of the metrics that are involved. So I don't think we disagree. Thank you.
No problem at all. And it also touches on that.
We
that
agree
culture.
to disagree.
It also touches on that element of social investment that we were discussing in the past, right? It's almost fundamental requirements that need to keep pace with the rest of the development as we go forward. Now, this is all great, right? You're sharing all of this data and this information from an organization's standpoint. But how do you then transition this outside of your organization? How do you ensure that your commitments are understood and are adhered to or reinforced or supported by a much wider supply chain? Because the supply chain plays a huge role in what you can and can't do as an organization towards your own growth ambitions. So how do you then bring them into play when it comes to this role? And this time, if we can start with Marie, please.
So we start to do that a few years ago with what we call our caring standards. It's a criteria about environmental side, social side for each process, for each raw materials. And we put this criteria in our contracts, so to be sure that it will be applied. Of course, we don't start directly to say it's a contract, no choice. We have also many trainings with our suppliers to really explain them why it's very important to apply this kind of criteria. It's of course very important to work with the Caring's brands, but not only. It's also for them to anticipate the future and to anticipate the requirement from, I will say, other companies, not only in the luxury sectors. What I have to say is that we have perhaps something which is quite different when you are in luxury. We work with small suppliers. They are more artisans. So when you were speaking also about reporting, and you know that in Europe we have what we call the CSRD, which is a very strong regulation. Reporting, it's not easy for a small company with only 30, 40 people, so we have really to be with them. They are really partners. They are not only suppliers, they are really partners.
Do your investors, do your lenders also understand this narrative? Are they on board with you? Are they a stakeholder group that supports?
Yes, of course. So that's why we don't have the time to go into details, but we have developed many programs also to support them, to make a calculation about energy, about water, but also about living wages, what does it mean for them, which kind of roadmap they can implement, and each time with some quantitative KPIs, a specific calendar, to be sure that it's not only to speak about it, but really, again, to implement on the ground.
Sure. Mohammed?
It's really a journey. I think if you ask individual customers and individuals, like I would say small enterprises with a lot of the suppliers, there is very low level of awareness of the importance and why is this important and what is involved in all of this. So we start small, right? We first, for all the customers and suppliers we deal with, we include ESG checklists. Those ESG checklists today act more of an awareness tool, because when they start filling it in, they see, oh, there is an importance for the governance, for good social practices, for good environmental practices. So it starts with that, right? And from our side, when we deal with our suppliers as well, we have those reviews for following good governance and so on. Do we apply like these checklists, the outcome of it, and like changing our pricing? I wouldn't tell you yes. Today, maybe if there is high risk elements, then we do. But I think where we stand in this region, it's still a low maturity. I think we need to build that maturity.
Sure.
And step by step.
Thank you. Clint?
So supplier emissions, to make 1.6 million tonne of aluminium in Bahrain, we require 3.2 million tonnes of alumina. To make that alumina, you have to mine 7 to 9 million tonnes of bauxite and ship that to a refinery, and then that 3 million tonnes of alumina shipped to Bahrain. So for our energy emissions and our aluminium production emissions, it's 7 tonnes. For the bauxite mining, alumina refining, it's 4 tonnes. So the whole purpose of explaining that is that it's a big part of our carbon footprint to make aluminium. So of course we meet with our material suppliers for that 3 million tonnes of alumina, and we share our roadmap and our decarbonising plan, and we expect them to share theirs. We're also encouraging them about solutions they can use to reduce their carbon emissions, and we also work with the shipping companies about how they are reducing their carbon emissions. So material supply is actually a big part of sustainability.
Okay, thank you. Seneca.
We've been working on bringing our suppliers on board for the last 2 years. We started with training sessions, as was mentioned, and we've asked all of our vendors to join SEDEX. And SEDEX is an organization that hosts a platform and scoring system where these vendors can put all of the necessary information that proves their sustainability credentials. And then we can see that, and we can track all of our vendors. It gives them a score, and then we can also have them audited. We started this 2 years ago with the directive to our vendors that once we get to 2026, you will be required to be audited for both environment and social and ethical trade. And we're at that point now. And by no means do we have all of our vendors on that journey. But we will continue on this process. We're planning for quarterly training sessions for our vendors face-to-face, not just online. We want to make sure that we give them the tools so that they can meet the requirements that we have. And it's really important because I don't think that a lot of businesses, especially those like ours that are family-owned, not publicly listed, they don't realize just how much regulation in the EU will impact them starting from this year, especially regarding social and labor practices for their vendors. But because of that, any of you who are doing business with companies that are based in the EU, you will have to make sure that all of your suppliers meet certain standards that are required in the EU. Because the companies that you work with may not be able to use you. So it's really important for us to bring our supply chain along on this journey as well. So it's really about training because most of our suppliers are SMEs.
Thank you. Sarah.
So we do work with our supplier, learn with them, hold them and ourselves accountable for various highest kind of standards on integrity, HSC, and so on. But I really want to answer your question in a practical and a little bit nuanced way. And also because I'm a very big fan of our ICTIVA program. What ICTIVA is again, another acronym, in Kingdom Total Value Add. This is basically the localization of supply chain and procurement within the kingdom. Very proud about incredible contribution, $240 billion accumulative contribution to the kingdom's GDP. Hundreds of manufacturers that were established in kingdom, dozens of products and items that were manufactured in the kingdom for the first time. So a lot of achievement, but what goes beyond this creation of network is the network effect. It's the knowledge transfer, it's the access to best practices. It's basically an open dialogue between us and our suppliers on everything that involves sustainability, from the reporting, the methodologies, all the way to the operations. It is, and I think it is really what contributes to the having it in the DNA within the workforce, within the younger generation. And it goes beyond our own boundaries. It's really the whole industrial ecosystem. And perhaps not at the same scale, with various scales. This is the kind of approach that is really needed for the region to enable this integration into the DNA about the best practices and the knowledge that comes with it.
Thank you, Sarah. And this is also a critical part of any form of change management, right? Almost taking your stakeholders with you on that journey, aligning in terms of targets, aligning in terms of direction. How do we kind of meet this collectively, as opposed to, what can you do for me? In the interest of time, what I would like to also do is almost do a quick 2-3 rounds of lightning questions. First thought process in your mind. How do we kind of, contribute towards change as we go along on this journey? And we'll go wave 1, wave 2, and if we have time, another wave 3, so that we know the order in which we're going. So, question 1. What's the one thing that you'd stop doing immediately? It might look great, but it's actually not contributing towards moving the needle in terms of the outcomes.
First, I'd have to say, from the Ashaya perspective, I would say green hushing. We are, as a business, because we are a family business and we're very concerned about our reputation, we don't actually talk a lot about all the things that are happening internally. So that's the one thing I would definitely stop.
Fantastic. So.
A stub is not something that I would do in my industry, an abrupt stub. But if it is something that I also just heard my colleagues speak about, it's really a plea to sort of stub, which I think the world has already done that for us, is not to lean into stand-alone narrative around what sustainability is, who is it for, and who are the buyers or the winners and losers, who are the winners and losers in one narrative. It really has to be inclusive of all of the different contributors.
Fantastic.
To react also on what you said, as a family listed company, I think it's also very interesting because we think for the long run. So not only the stakeholders, but also the shareholders, they are thinking for the long run. I'm very proud about what the family put in place many years ago. So your question, it's perhaps the tougher one. I think what it's important is to stop to speak, even if this morning we speak, but it's also a way to involve people, but really to have concrete results on the ground.
Fantastic.
We don't have time.
I think I'd stop superficial initiatives. I think the focus needs to be on GHG emission reduction and sustainable finance increase.
Stop to listen to customers. Stop to listen to our key stakeholders, and stop to listen to the surrounding community and economy.
If there's one metric you trust and one metric you don't, what would that be? Clint?
The weather. I think at least the last 5 years, reporting metrics have really evened up. There is much scrutiny, and in fact, I would say that the level of trust has only been increasing, which is quite pleasing. So I don't have one metric that I can't trust other than the weather forecast.
I think what I trust, I think the carbon footprint is now kind of, there is measurable ways of doing it. What I don't trust is the ESG metrics, kind of the ratings. I think we've improved a lot in the ratings last year, but I mean, a lot of those ratings are based on global metrics, checkbox here and there and there and there, but really not contextualized to where we stand in Bahrain and to our culture. Sometimes they slid in stuff that are really contrary to what we believe in, and I think they're just there to force something, sometimes in a good place, but so the ratings themselves, I mean, we do them, but I don't believe them.
There are some rating mechanisms that are run by consultants. Often your rating depends on the value of the fee, so it kind of goes both ways. So independent ratings. Marie.
What I believe it's KPIs, it's data which are coming from IPPC for climate and IPBES for biodiversity. It's really the scientific world. And what I don't believe, I fully align with you. It's some ratings and rankings which are only made to do buzz. So some of them are very good, but some of them are only to do buzz.
Yeah. Sarah?
Likewise, I think through this journey that all of us have been moving on with the sustainability, I think there are definitely some questionable matrices, and I think now the focus is really on what can deliver impact, what can connect the business performance to the sustainability performance. If anything, it's even more ambitious than everything that we have seen before, but it's true. And along those lines, what I personally like is our what we call upstream carbon intensity, because it provides an answer, a pragmatic answer to a very complex question, this around providing energy with the lowest emission. So when you say this barrel of oil is delivered to you with the lowest energy intensity or the emission intensity, this is actually a pretty good answer.
Fantastic.
I'm going to be a little controversial. Right now, I really don't trust anyone who claims, any company that's claiming that they're carbon neutral or carbon positive, because we've seen that many companies are using offsets first and not last. So I take those claims with a grain of salt.
Okay. And this is just as a last wave across the panel. As leaders within your organizations, but more importantly, leaders within the communities, the countries, the marketplace that we represent as well, if there was one commitment you would make towards this journey in the next, say, to achieve in the next 12 months, 18 months, what would that be?
Our big commitment this year is to be more vocal about what we're doing, but making sure that everything is backed with data.
I would say you'll have to read our next sustainability report, hopefully targeting second quarter of this year to see what we're up to next. But I mean, you know, there's always great stuff happening. What comes to mind very quickly is area around digitization, methane management, as well as with flaring management. Those are just few things at the top of my mind.
Perfect. Marie?
Two things, to be sure that all the leadership in the group have their salary and bonus aligned not only with financial performances, but also non-financial performances. It's a way really to transform the business. And on the other side, to be sure that what we call artificial intelligence, which at the same time consume a lot of energy and a lot of water, it's well used inside the company.
I got inspired by Mary Claire. I think I'll pick that we're committed to deliver a toolkit that helps SMEs do ESG tracking and reporting.
Fantastic.
12 to 18 months, maybe 18 months. I think Alba will bring eternal renewable energy sourced aluminium. We already have the framework ready to go. We have a small solar plant on Alba site, but I think Bahrain will see solar farm scale solar installation, and that will bring renewable energy to Alba, and we will make eternal renewable.
Fantastic. Ladies and gentlemen, first give my panel a great big round of applause, please. Being as candid as they were, sharing their insights, their thoughts. I think we have a couple of minutes for one or two questions. Yes, please. We have one right here. Hang on, I can get to you faster.
First of all, I'd like to commend the panelists for clearly putting the answering all these questions about such a difficult thing about sustainability. But I'll try to go back to the title of the panel, which is Reshaping Sustainability, Risk, Returns, and Economic Opportunity. And before I go back to the comments, I would just like to say that there was an opportunity. I mean, what I'm going to say, maybe it will surprise a lot of people. In 1980, we established something called the Arab Society for Solar Energy. Saudi Arabia at that time, from 1980 to 1985, spent $500 million investment in solar energy, doing solar projects in various parts of Saudi Arabia. So we were leading in the whole region. This area was leading in solar energy at that time. At that time, the price of watt, it was $8 per watt. Now it is less, maybe $0.50 or less per watt. So you see the opportunity. If that investment, if that continued. The program, unfortunately, stopped in 1986. And the same thing, Kuwait was leading in conservation of energy. And, you know, there was a lot of work was developed and doing at that time. Everything stopped after that. Now we lost that opportunity. Now we're going back. When things are different, when there are more players in the game, the same thing. Now I go back to the panel. You see, I commend each one which is targeting their organization. But I think, imagine that the problem is not just fragmented like that. I don't know how many fragmented. We could have 10,000 of companies, each one doing something. But what we need is to create something unified outside each of these organizations, something that we all have in common, basically the environment, some sort of fund, some sort of money. That will create a big impact, and it will return eventually to each one. Now, regarding the carbon, I will talk later on about it. But I think Alba should, when they export, they should charge the carbon to the country that's importing it. It's not vice versa, because that energy for export is not used inside Bahrain. Okay, I'll stop there. Thank you.
Thank you. Any other questions? Laila.
Thank you for the panelists for this interesting panel. I have a question for the head of sustainability in the Shaya group. I'm really curious about knowing more about how could you reduce 40% of your food waste in your restaurants, because it's crucial for how to reduce organic waste that producing methane, which is a very high global warming potential climate emission.
So just to clarify, in our restaurants, we reduced the non-food waste by 40%. However, to answer your question, what we're doing now, as you may not know this, but in all of the Starbucks locations, we actually make all of the food in UAE, Kuwait, and KSA. We have our own food factories where we produce thousands and thousands of items every day for the Starbucks locations in our restaurants. And in the UAE, we have implemented a food waste management program. It's just begun, so we don't have good results yet. We don't know what the long-term results are, but we're trying to reduce, we make about 8,000 tons of food waste at our UAE facility every year, and so we're trying to reduce that completely. But the challenge that we have with food waste is that in this region, we just don't have vendors or suppliers who can take the waste at the volumes that we create. Most of the waste that we produce is actually not back of house, The back of house, are nearly 0% waste, because even the scraps, we use as many of the scraps as possible and the leftovers to make staff meals. So we consume a lot of that. The problem is front of house. So what we need help from is our consumers. When you come into one of our restaurants, that you order what you're going to eat. If you don't eat all that you've ordered, take it home, eat it at home, give it to a worker, but use that food, because that's where the majority of our food waste is coming from.
Ladies and gentlemen, we are absolutely out of time on this one, but let's quickly thank the panel. Another round of applause, please.